Howdy who, all my stock market gamblers. I'm Tall Mike. Welcome today. Anyways, today is Thursday, September 24th. What I want to talk today about, well, the markets have been struggling this week. They've been in a downward pattern. But what's really getting hit is gold and silver. Yeah, and of course, if you watch this channel, if you subscribe to the channel and punch that button, you would know that I am buying more gold and more silver. And even Bitcoin got hit this week. Gold, silver, Bitcoin going higher. They're beating it down now, but it's going higher. That's what I'm doing this week so far. But anyways, what I want to talk today about is black gold, oil. Love oil, but it's not like a hard asset. It's not something that you can just store away and keep. Anyways, oil right now, I just want to talk about it because it is cheap. It is cheap. I'm going to go on record here. It's cheap. And there's not a good way to buy it and hold it, though. Anyways, this is a chart here of the United States Oil Fund, the USO. So the USO back here in, end of April, it just got beat down, hammered. It got all the way down to $17. That's cheap for the USO. Okay, now you can see where it rose back up here, but we're sitting right at $28. Look at the 200-day moving average. You can barely see it coming out here. But anyways, the 200-day, it's $48, and we're at $28. So you got $28 and you got $48. If the stock market's going to rally at all, they're going to find a way to make oil go up. I don't know. Threaten a war with one of the oil countries. I don't know how they're going to do it, but they're going to float something out there that's going to make oil spike from here. They need oil to go up if they want the stock market to stay up, if they want financial assets to stay up. They need oil to rise. But anyways, oil's very cheap here, but what's even what is really a bargain? Okay, so look at this, 17, 28, but 48 on the 200-day. We're way below the 200-day. But when we scroll down here, I want to talk about ExxonMobil. ExxonMobil Corp. Anyways, this is a major oil company. Major oil company. And really, it's back down here at the same price it was back in March. It's just sitting down here. It's $34. Anyways, this pays a 9% dividend. Now, I don't believe I believe that dividend will get cut down, okay? But look, what are you getting on your money in the bank? I know it isn't 9%. There's no way it's 9%. Let's say they cut the dividend in half. That would still be 4.5%. You aren't getting 4.5% in the bank. This ExxonMobil is cheap here. Now, can it go down and get cheaper? Yes, it can. But here's the thing. This is already trading basically below its book value. Now, normally this trades at about 1.5 times book. And right now it's trading below book value. This has room to run up. It could run easily 50% higher. Okay, it's at 34. Tack on $17 to that, and you got a $50 stock, which really is just getting back to the 200-day moving average. I'm not in this yet. Anyways, I'm thinking about some long-term dated options. I'm thinking about buying it outright for that dividend yield, but I do think the dividend yield's going to get cut. But on any weakness, I'm looking at ExxonMobil. I'm looking at it. I think it's got a lot of potential here. I think it's very, very cheap. And the same holds true for this one, Chevron. Chevron's another one that's just beaten down. These big oil companies, when oil actually went negative. I've been trading commodities for like forever because I'm an old guy, but I never even knew commodities could go negative. Oil on the futures contract actually went negative like $30 a barrel negative. I thought that was impossible. I mean, a lot of people got hurt. I would have got hurt if I was in that future contract. That's crazy. But anyways, we haven't rebounded really. I mean, that was just on the futures contract. That wasn't really for barrel of oil. Barrel of oil, went down to a couple bucks, but that's just crazy. This stuff's valuable. And I mean, it's called black gold for a reason. Oil's valuable. It's just that they have nowhere to store it right now with the pandemic and all. Nobody's driving, nobody's flying, nobody's using oil. Do you think that's going to last forever, though? Do you think maybe we get back in our cars and we start to go places? I don't know. I don't know how long that's going to take, and that's the problem with oil. There's not a good way to store it, so they store it in ships offshore, and they're waiting to bring it onto shore when we need it, but we don't need it yet, so the prices are still beat down. This is Chevron. It is beat down. It's beat down. We're at, this was trading up here when it hit that 200-day. It just free fell from there. A 200-day a lot of time is resistant. It's a good place to short it. Those people of you that shorted it at the 200-day, you're doing quite well. I mean, $100, now $70. Okay. Anyways, this pays a 7% dividend. 7% dividend, and it might get cut. I'm not sure, but that's a good dividend. I mean, in the bank, I don't even get 1%, not even 0.5%. But things like this are things that I look at because they're cheap. They're cheap. And I'm not saying this is going to bounce up tomorrow. I'm not. But it is cheap. And if it gets cheaper, maybe some long-term options on this. Maybe go out till March of next year. Maybe the pandemic lifts and we start driving, we start flying again. We start going places. We start getting around town. I don't know. I just think I want you to look at them. I want you to be aware of them. I want you to know that they're cheap. Now, here's one that I did pick up today. Okay, I'm going to go down here. This is the XLF, okay? This is the financial sector. Anyways, financials are beaten down. Okay, the 200-day moving average. Now, I know all those FANG stocks, the Googles, the Apples, the Amazons that are way above their 200-day. But the financials have just been beat down. Once again, today I'm just looking at things that are cheap. But anyways, the financial sector is very tied to oil. Because they have so much financing out there in the oil market. And so when oil prices go up, the financials go right up with it. And this is why financials are down. Oil prices are down. But on a rebound, financials will move up. And I think financials are really cheap here. Anyways, the XLF at $23. Anyways, I bought some November, they were November calls. Taking a shot. I didn't buy a lot of them, but this could easily get, I'm just looking for a couple dollar move, 23 to 25. I'll be happy. Those calls will double, maybe even a little better than that. But I got some November calls on the XLF. Now, anyways, this is what I do. I look at charts, and these are charts. Today, I just picked out ones that are cheap. I have other secrets as to how to play these, how to trade these. Anyways, if you want my secrets, just go to stockmarketgambler.com, and I'll give you my secrets for free. Just put your name and email in there, and I'll send them to you. But it'll take your trading to the next level. You'll level up. This is what I do. I look at the charts. I find things that I like, and like I say, today I'm looking at ones that are cheap. And cheap isn't always what you want. Sometimes you want things like right here. When this hit the 200-day, this was a great shorting opportunity. Anyways, XLF hits the 200-day, boom, drops like a rock. Boom. Hits the 200-day here, boom, drops like a rock. Boom. These are good shorting opportunities. How the line is sloping downward. Look at that. It's just it's just knocking it down. It's just pounding it down again. Anyways, these are just little things that I look for, and you should be looking for them too. This stuff is fun. It can make you money. It's what I do. It's what I love. So anyways, hopefully you're all having a good day today, and I think the markets are just kind of floating around today, down a little, up a little, down a little, up a little. Not big moves yet, but we may get one. We may get one by the end of the day, so just sit tight. And yeah, that's it for today. I'll talk to you all tomorrow. I'm Tall Mike.